Welcome back, everybody, to the Board of Advisors podcast. I'm your host, Dillon England. Today, we have a really amazing guest. We have Jeff Luzzi from the Terra Rosa Family Office. Been in business for 10 years. Absolute killer. We're just talking off camera, guys. Recently just raised $190 million for a fund.
Yeah.
That's a ton of money.
Yes.
So it makes me think that you kind of know what you're doing and a lot of this stuff. And I can't wait to hear about your story. So the first question I just want to ask you as we kind of get going, who are you guys? And what do you got going on like right now? Like, what are you passionate about? Like, who are you guys?
Yeah. So, we're a family office in Southern California, and, we're predominantly, focused because given our backgrounds and we're operators by trade, we're focused on enterprise software and technology. But, what we're mainly focused on is, kind of bringing technology to the financial services game as it relates to alternative funds. We know that in the future that emerging managers, first-time managers, while they have a perception of being kind of the riskiest people to invest in, that I think with the right kind of systems and structure, that actually you can make them, less risky. And that's where really at the end of the day, that's really where the real alpha is.
And you, what you really do is you help invest. You invest in opportunities.
That's correct.
And then you also help connect investors with opportunities.
That's right.
But you mentioned something earlier. You said you're an operator by trade.
Yeah.
What does that mean?
So most people in the private equity space, came up through the ranks of financial services. They got finance degrees. They went on Wall Street. They have that kind of network. Myself and my partner, we came up with being entrepreneurs. We owned our own businesses. We started our own businesses. We grew them from zero to, in many cases, tens to hundreds of millions of dollars. And, we understand that side of the business more so than financial engineering or, some of the things that, and again, both sides are important. But, we really feel like the battle scars and bruises that come with being an operator are far more lasting and valuable, to businesses that we tend to invest in.
So you invest in businesses. You've done it for over 10 years. I'm sure you've learned a lot of lessons along the way.
Yes.
Before we get into that, tell me a little bit about your story, man. This is kind of a newer venture in your life, it sounds like. So what were you doing before this? What led you to be like, you know what? I think I should start a company where I create funds and invest in businesses and get investors. Where did this come from?
Yeah. So I was a late bloomer, I guess is probably the better way to say it. But, ultimately I figured it out, grew up, and graduated with all the appropriate degrees. And my first job out of college was working for AT&T. Nice. And that was like a dream job, and I really enjoyed it. And I enjoyed it until I didn't. And as I started to learn more about myself, I realized that spending half of my day navigating bureaucracy was just not a very efficient use of my time. And I was becoming very frustrated with the culture, and it started to really get me to understand and appreciate the importance of culture when it comes to companies, and kind of know where you should be. And then over time, I started to gravitate towards more entrepreneurial type of opportunities throughout my career until I decided that I was going to be an entrepreneur myself. And one of my first investments was opening up a sports complex in Southern California. Nothing I've ever done before. And I was in one of the local papers is saying, when I started it, I thought I knew about 90% of what I needed to know. I felt very confident and cocky and arrogant. And, once it started to open and the business started to happen, I knew about 10% of what I needed to know. And it was a humbling, painful experience that I'm so grateful and thankful for, because that's really where the growth happens.
So you late bloomer, AT&T out of college, then you started the sports complex, and then what got you why investment funds? What about that was kind of hey, I really want to look into this? Because you could have done anything, right? There's a million things you could have done. Well, why investment funds? What do you love about that?
So I'd always been curious about being on the other side of the table. Most of the companies I've worked for, they were either owned by or being acquired by, or tires were being kicked by private equity. And I was always curious about that side of the table. And I always felt like that was the right side of the table to be on ultimately. And as I continued to learn more about it, I became more and more interested and fascinated with it. And that, ultimately, if I'm going to work hard, and I have an entrepreneurial kind of nature, I should work hard and have the greatest opportunity to have the greatest impact and make money at the same time. It's okay. What do they say? Like getting a degree in some of these things, like just don't pencil when it comes to financial. You can be ultimately fulfilled, but you can't even pay your student loan back. It becomes a problem. For me, I like to be able to check as many of those boxes as I can. Yeah.
What's a project that you've worked on recently that maybe you invested in something, or like something that you were able to help someone out where they came to you and they were like, hey, I've tried other people, and you were able to help them? Like, what does that make you feel like? And what situation were you able to get that done?
Yeah, I mean, I really do. I do experience that quite a bit because, again, we deal with these first-time managers, and they have some pieces of the puzzle, but they don't have all of it. And if you don't have all of it, the more you don't have, the more risky you are as an investment, and the more likely you are to fail. But I will say this: one of the projects that our family office decided to get involved with is in this kind of physical asset tech space. And it's be broader than just construction tech. So I used to call it just construction tech.
Okay.
And the guys that are they're two operators, unbelievably talented people. They know the business like the back of their hands. Their first fund was incredibly successful. And while we typically only do first funds, their second fund, we just said, we really want to be a part of it and be close to these guys because they're just great people. And they really know what they're doing. And so their understanding of the physical asset technology space, construction, dirt analyzing, the whole soup to nuts, anything that has to do with the physical world. They understand it like the back of their hand, and how to, what are the latest companies in that space from a technological perspective, robotics, AI, the whole gamut. So like whether you're like in that space and you're not using that kind of technology and you want to know, man, what's really emerging and what's really going to stick, these guys are the talk to. And if you're looking for some exposure in that space from an investment perspective, honestly, I don't know of anybody else smarter than those two guys.
And then what you help people do is get the funding needed to almost realize their dreams, right?
Yeah. So
that's really where you come in, is to get them funding.
It's through the whole spectrum. I would say that if they don't have the infrastructure for like having a fund or getting their company kind of structurally set up the right way, so we call it fund formation or fund incubation, like we help them with that. And then if they need, access to our network to kind of help, broaden their pool for fundraising or for advisors or for whatever, then we kind of help, leverage our network and our expertise to kind of get people to, introduce to them so that they can make their fund, whether they're, like I said, whether they're filling positions on the advisory board, or they're looking for companies to invest in, or they're looking for actual investors.
What's something, and I'd love to help you give some advice, because I think a lot of the listeners of the BA podcast, some of them are seasoned entrepreneurs. Some of them are brand new, looking for funding. They're like starting a company and they're looking for some working capital. What are some like do's and don'ts for first time, not even first time entrepreneurs, just first time people looking for funding? Like what's some do's and don'ts that you could maybe guide them in some advice?
Yeah, so I actually just gave the keynote about this exact topic. Plan ahead. Right now, people that are looking to raise, no matter what amount of money it is, it's a 14 to 17 month process. And most people, when I say that, they go, oh my gosh, I am way behind. And so typically you are. Two, if you are not comfortable fundraising, get somebody a part of your team that is comfortable fundraising, because you want to build trust. You want to build credibility. You also need to have a system that helps you build trust and credibility quickly, because 12 to 18 months, like most people don't even get married until years and years of being together. And most people care about their money sometimes more so than they do about, their spouse or some of this other stuff. Yeah. And so they're very cautious about what they do and how the decision making that they have. And so for you to be able to build that kind of trust and credibility, you really need to have a system. You need to be disciplined and have the right people surrounding you to make you successful.
So you said plan for it.
Yeah.
Can you give me some like granular, like what does that mean? Does it mean like bringing on someone like you guys? Does it mean hiring an attorney? Like granularize for me like what
Yeah.
plan for it means.
Yeah. So, let's use a Stephen Covey kind of phrase, begin with the end in mind. So your end state needs to be a pristine data room.
What's a data room?
A data room, basically, it's just like a Dropbox folder. It could be as simple as a Dropbox folder, but it has all the different information that somebody would need if they were looking at you and your the opportunity, that it would answer all of their questions. It would have your entity information. It would have the legal documents. It'd have projections. It'd have your pitch deck and a teaser and a due diligence questionnaire, all the references, all the great stuff that you would need to put in there. And I say that and I go, this is one of the most important things, because when you tell somebody you have that tells them that you put in the effort.
It's immediate credibility.
Immediate credibility. There's trust. They feel like you have disclosed everything. You've been transparent. Now, I will tell you this, the flip side. Most people spend minutes looking at your data room. And it's so frustrating.
It's so impactful.
It's so frustrating.
Yeah, it's so quick.
They will spend minutes, maybe hours tops, depending on the check size. But you have to have it. And so it's really important. There's a variety of things. Planning ahead. When I say planning ahead, 12 to 18 months. Because it's going to take a while for you to get all the multi-dimensional content out there, to get your word out there, to get your network, educated and then open to. And then not everybody's liquid. Like if you had $1 million and you had to deploy it, you're looking to deploy it as quickly as possible. Yeah. They're not waiting for you, and they're getting deals presented to them all the time. You could easily miss the
boat. Well, you're saying if I can just if you don't plan ahead, you might have an investment that someone's willing to write you that check for. Mm-hmm. But if you don't plan ahead, you could lose that opportunity just because of timing.
100%, because they've either already worked with somebody that has a deal and they've already committed to it when they're going to be liquid.
Yep.
And so typically you'll hit everybody's liquidity cycle in that 12 to 18 month period of time. And you want to get your opportunity in line already through due diligence and already approved. So when they become liquid, that's when they deploy their funds to you.
Have you found that I have no idea if this is true or not. Okay. So you could be like, Dillon, you're an idiot. Have you found that end of the year is a really good time to raise capital because people are looking for ways to dump funds, tax savings, stuff like that? Or is that just a myth that that's not necessarily true?
It is in certain situations where there's a tax ramification associated with that. What I will tell you is that typically raising money the last 2 weeks of November all the way through, say, the first 2 weeks of January, they're dead.
Interesting.
You can't raise. It's almost impossible to get anybody's attention.
Why is that?
During that
just
period
Christmas
of time.
It's just
it's the holidays. Yeah. It's this, and the first 2 weeks of January, everybody is.
Because I would think that December would be the best month because people are trying to offload capital before taxes and that kind of stuff. But no, not really.
Not necessarily. Typically, you've already made those decisions. Yeah. And sense. come Thanksgiving. It really gets shut down. Now you might have still some, contracts and this and wiring of funds and some of that stuff, but the decision to make that investment typically is done before that.
So talk to me about setting expectations for either someone looking for capital, looking for investors, or investors looking for opportunity. What's the average timetable that you found of when people are I'm looking for investors to actually getting an investment? And does it just purely depend on where they're at, their idea, or is there generally a timetable that someone should be hey, you're probably not going to get funding for 12 months. It's a process.
Yeah, I will say this. More than likely, you will have some early interest and people that will gravitate towards it immediately. Let's call it a handful of folks. Mm-hmm. They may or may not write checks, but they'll get you excited that you may think that this is going to move quickly.
Yeah.
And then getting the first investor in is the toughest. Nobody wants to be the first. And then after that, you're going to go through a lull and you're going to get depressed and you're going to feel like
an entrepreneur.
You must have some kind of body odor or something. Yep. You're repelling people because you're just not getting the same kind of love and attention. And then, you'll continue to stay true to the process, consistent with your system. And then time and maturity will then set in. And before you know it, people will start gravitating towards your opportunity again. As long as it's good and this, and you've done all the the right steps, the people will gravitate towards you. And so ultimately, it's going to be 14 to 18 months before you're fully raised.
I want to spin it because we're wrapping up on time, and I want to spin it to two things real quick. We talked a lot about, the opportunities and raising capital side, but talk to me about what are investors looking for in companies right now? What's you mentioned having that Dropbox file, the data, planning ahead, but what is something that if someone's what are investors looking for right now?
So investors are looking for high alpha, high returns. But if they're too high, then they consider it to be too risky. Interesting. And so what they're looking for somebody that can convince them that the risk is very low, and that they've done their work to mitigate the risk while still providing above average returns. And so that's really what everybody's looking for ultimately, but most investors are looking for that. And then they're also looking for the comfort of investing alongside people that they trust if they can't get there on the actual investment itself and trusting that person because it's just too new of a relationship. So when I say that our family office is invested in or speaks highly of certain investments, that tends to allow people to get more comfortable because they know us and they trust us.
It's all relationships. Right. It's all relationships.
Right.
And I'm assuming if someone's looking to raise capital, relationships are probably one of the most important possible things you could do is getting in the right rooms, building the right conversations with people and the right relationships. Right.
In a systemic manner, because it's about how you touch them, how frequently, the follow-up, and how disciplined you are, because if you have a disciplined systemic approach, they're going to think that you're going to run your company or your fund or whatever they're investing in the same way. And that instills confidence in people.
Because you could also meet the right relationship at the wrong time.
Yes.
Like you were saying earlier, if you're not ready for that relationship, you could meet the perfect person. But if you don't have your data set, if you don't have everything ready to go to capitalize on that, doing it in a systemic way to where you're ready for it is one of the best things you can do.
Mike used an example in the session where someone didn't have their legal documents ready, and there was an investor that was going to write $1.5 million check, and it took a quarter for that person to get their legal documents in order, and that investor had moved on.
Yeah, man.
Yeah.
That sucks.
Because it's a lot of work getting an investor from being relatively cold and you don't know who they are and they don't know you.
$2 million, yeah.
And you got them to the point where they said yes. And so I always say this: if you're going to an investor meeting and you think this is closing time, if you do not bring a subscription agreement, a commitment letter, something with you, just in case, you're going to kick yourself.
I like getting advice from entrepreneurs. And I think one of the best things we can do for the listeners is take the 10 years of your experience. And so I ask this question a lot. It's one of my favorite questions I ask guests on my personal show. What's a lesson that you've learned over the last decade of doing this that you know now that you wish you would have known when you started? And if you would have known that when you started, you would be so much farther ahead right now. What's a lesson that you've learned that you're like, man, if I would have just learned this earlier, this would have been so much better?
Yeah. You can't fall in love with your own deal. Investors don't necessarily invest in the best deal. They invest in projects for a number of reasons. And sometimes it may not be the best deal, but they have the most comfort, the most trust. They've been managed, handled, treated through a process the best. And maybe it's less than the best deal that's out there, but it's really about the deal and the system and the process that goes along with it. And so having the best deal doesn't necessarily mean that investors are going to understand it, recognize it. And when you fall in love with your own deal, but you think that that's going to compensate for your deficiencies in these other areas, you're making a big mistake.
That's good advice. One more thing that I wanted to touch on. We're living the crazy world of AI, right?
Yeah.
Everyone's AI. How legitimate is it to use AI to help you get the baseline of your legal docs? I know it's not a lawyer, but at least get your thoughts on paper, get everything. Is AI enough to make a contract? Do you always need to bring in a lawyer to review the AI? like how important is AI in this thing? And then like how much should it be leveraged? And like what's the danger of leveraging it?
Yeah. So at a macro level, what I'd say is AI it gives you no excuse not to have a system. Like, and now you can do it in a cost-effective, disciplined manner in a way that you haven't been able to do it before. From a legal perspective, like Forrest actually talked about yesterday, he's able to take what was a $300,000 legal bill for putting together the appropriate documentation for funds down to like 40, years ago. And now with AI, he's got it down to 5.
Wow.
So there's no excuse not to have your legal documents done, as part of the process of being ready for fundraising. And so you still have to go through a lawyer. You still have to do all that kind of stuff. It's just good hygiene to make sure, and good protection to have all that kind of stuff in place.
Lawyers, the quality control.
But for $5,000, there's no excuse not to have all your legal documents set up at this point.
That's great advice. I think sometimes business owners get too heavy on AI and they're like, oh, I don't need lawyers. I'll have AI write my legal docs. And that's a big red flag. It's like, it can do the grunt work, but definitely have someone check in on that.
And I will tell you this, there was a recent ruling in a court case that everybody should be very concerned about, which is anything that you plug into Ask AI, any document that you feed it, if it is attorney-client privilege, it now no longer is attorney-client privilege once you feed it to AI. And so it's all discoverable. So anything you feed, anything you ask it, questions like, how do I get out of this bad situation that I'm in? I probably did this and this bad, but this guy did this and this bad. Like, you're almost now like
incriminating yourself.
Right. And then you're like, here's these attorney-client privilege documents that substantiate this and that. Those are now all discoverable.
Yeah.
There's no more attorney-client privilege. And so you have to be very careful. So I would tell you what, the legal space right now, I'm sure just like HIPAA, is they're all looking at this ruling and going, oh my gosh, there's some very interesting things that need to now be considered as it relates to protecting attorney-client privilege and HIPAA, because most people don't understand that once you plug it into AI, it's open.
Well, first of all, that's a good warning for everyone listening.
Yes.
So that's also a good encouragement. This is shout out to board of advisors. Like, this is the type of people and knowledge that you get in a mastermind like this. Jeff, you've been an amazing guest. I always give, at least on my show, I'm going to do it on this show too, an opportunity for you to just promote whatever you want to promote. Where can people find you?
Sure.
Where do people go? And then we're going to wrap up the show.
Yeah. So, you can find me or Terra Rosa at terrarosafo.com. I didn't come prepared with my link, but I have a link. Maybe I can give it to our buddy over there, and he can put it up on the screen.
Carl got you.
Carl got me.
Carl got you.
And that I have now a single site that you can go to. You can look at kind of deals that we have kind of put our fingerprint on that we feel good about. You can see what we're looking at and what we're trying to invest in. And gives people some comfort and, kind of how we approach the type of business that we're looking at.
That's great, man. Well, guys, check out Jeff. Check out his link in the description below. And thank you for listening to this episode of the Board of Advisors podcast. As always, like, comment, share. And if you're interested in becoming a member of this mastermind, you're going to definitely want to check it out at the website as well. Thank you guys for watching and listening to this episode. See you on the next one.